this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com, and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. Okay, how's everybody doing? I hope you had a good weekend. I'm wondering which one of you guys did this. I'm just kidding. We are dropping out. We had kind of a symmetrical triangle. If you can kind of see, we had this triangle formation that we had built, and I definitely was expecting a break to the upside, and instead, Sunday, we dropped down, broke out to the downside, which is not what I wanted, but you know what? I figure let's get to the bottom of this thing. Wherever the bottom is, let's get there. Our low just barely happened. It was minutes ago. The low currently is below 15,500. If you'd asked me a year ago, are we gonna ever see 15,000s again? I would have been like, I just don't think so. I really expected the prior all-time high to be support. So the 2017 high should have a lot of power, but we struggled with it for months and months and months. We were kind of back and forth and finally starting to lift off, and then the FTX thing came and knocked us out. But you know what? I figure whatever Bitcoin has to do this cycle to get to the bottom, I figure let's just do it. Let's rip that Band-Aid off. So it is not uncommon. I've seen this formation a lot of times in many different assets where the initial drop goes, there's a consolidation, and then there's kind of a final hurrah. So, you know, I have no idea if this will be the last one or not, but I figure if there's any fear left in the market, let's flush through that and we'll move on from here. So I just I plugged in our most recent activity into the chart. I'll just update my number really quick since we dropped so fast, 15,630. And I'll show you what this chart looks like. So our accuracy is thrown off again. This is definitely an unusual looking chart, but this is the chart we're matching closest, and this was recent. So this is what we're looking at for the most accurate, and then we have a 2014 and 2019. Apparently there's a chance that we move up tomorrow, but it's you can see how these numbers are big. There's only a couple that are less than 1%. And all of the predictions are volatile because this setup, breaking out fresh from a consolidation, is going to be volatile. Either volatile go down, volatile go up. The cases that look the ugliest look like this. And this. But yeah, I figure let's get through it. Whatever emotion needs to happen, let's do it. For those that are that are trading, as long as your position is small and we're just being patient, there's no need to rush in and try to find the bottom right now. In my opinion, I figure we will find a good place. We'll get some support, and then we'll be able to move on. So I wanted to talk today a little bit about this. I wanted to take our analysis. Last time we talked about kind of crypto 4-year cycle and everything. We looked at the peak to the bottom and kind of how that played out, or you know, where this, you know, if we go from how long it took us to go from the peak to the bottom and the bottom to the peak, and what kind of measurements and what can we determine from that? Well, I think we should take a different approach today, which might be interesting, because see these big red arrows on my chart? These are the halving events. So the halving happens, and then you can kind of see where the market goes from there. So really, all of the work as far as the bear market, finding a bottom, finding support, and all of that, by the time we build up to the halving, we are pretty much well on our way. And so our current market is a little weird because we're not sure which one of these is the peak. I mean, it was a double top. From a time basis, do we take this one and go? I mean, has this been the longest bear market in history from this data point right here? Or is it kind of on track, nothing unusual? We started from this high, and this is just a standard run-of-the-mill bear market. So that's the question I want to answer. And I think we'll get a little bit closer if we look at the halving. When you go from the halving to the top, it's usually, you know, you give it a few months after the halving and you just start building up this momentum. And it happens from miners. When miners are the first ones to get the coins, and historically they've been the biggest holders. So when they sell, it causes the most dramatic impact. Well, I don't know if you noticed, but with the price down here, it is making mining very unprofitable. When the price is high, mining is really profitable. Everyone's investing in mining equipment, and there have been plenty of miners that have gone public, and they specifically did that so that they could raise funds in other ways rather than selling Bitcoin, and they've been saving their Bitcoin. Well, there's an analyst. This is not updated, but this is his chart, and he's looking at miner sell pressure, and the amount of Bitcoins that miners are selling has absolutely skyrocketed. And it's because these miners are hurting. The bottom of the bear market, they've pretty much exhausted all of their resources to keep things going, and miners are selling. Well, miners have a lot of Bitcoin, and so it's this fundamental issue that's causing this sell-off. Well, when the miners are out of powder, we're gonna have our bottom. So like we're getting there. And it's awesome. You know, days like this can be discouraging, but I just look at everything like, you know, if this is what the market's giving us, then let's take it. Let's get it over with. Let's go through the whatever we need to find our bottom, and then we can move on. So going down, finding a little support and having one final vomit of the price, that's okay. We'll let that flush through the system. So back to the analysis. Let's take a look at the first halving. And we don't have much data here because the first halving happened before there was decent charting in place. So if I just take a measurement and I take it from the halving and I go to the bottom, this was, it was a, let's see, so 373 days. So from our bottom, 373 days later, we had our halving and we were off to the races. So 373. Now we've got much more data and much better data in this next cycle. And so let's take a look and see if there was a large difference. I'll grab my measurement again. And from our halving event, because the halving is when you're ready to rock and roll. So we're building up to that halving. It took us about 540 days. I would say this is much more realistic. This is probably our first really good data point. So if it takes 540 days from the bottom to our halving, That's a decent amount of time to be building up. And we probably didn't see a real good strong move until we had our final flash crash at 317 days away. So about a year before we start building. And that's kind of what I've been looking forward to, this kind of building phase. So we'll go with 540. And now let's look at last cycle. So this is getting a little bit more current. Take it right from the halving, and we will go back to our official bottom, 512 days. So so our prior one was 540. With 512, that's a slightly smaller number, which means that our bear market was a little bit faster. We kind of got through it. We're a little bit more progressed in this move. And I guess in this case, we had sort of a kind of a flush out at 458, but we kind of got a little excited. And then of course the COVID crash was kind of an anomaly. I wouldn't really say that, we have to wait till 60 days before we're really out of the woods. But let's take that down about 512 or whatever as our next data point. So now let's take the approximate halving from our 2024 halving. And this is scheduled to be on, currently, it's, I guess I don't have the date. But this is it. I put it on from where the estimation was. Now let's go back 512 days. This puts us on December 6th. Very curious. Now let's take it back to 540. 540 is November 8th. Okay, let's zoom in. This is very, very interesting. Zooming in is not being very pretty for me. I was trying to, oh, hang on. I can move this over and this will help a teeny bit. All right, at least our bars are just a teeny bit fatter. Okay, let's do this again. Let's take a look from our expected halving to our current day. We're at 527 days. So we're pretty much smack dab in the middle of where the prior bottoms were in relation to our halving. So we may be on schedule. If I go to 540, it is literally the FTX crash. It was the first day, the first red day of the FTX crash. So that was our 2015 bottom. So our true bottom this time is today so far, and it's 527. I think you get it though. Like, we're getting close. We are very close. In fact, so close, I was getting, pretty excited about buying in and finding opportunities right during here, because this last movement here was so dramatic. I was suspecting, especially since it was we were touching the top of the 2017 high. There was a pretty strong case to be made that this was it. But from a timing standpoint, I've rushed it. It looks like if we did a typical bottom, like, we're right on schedule. This bottom here, where we finally went lower than this move here. So this was our original cycle bottom that I assumed would be it. This was dead on schedule for the 2015. So the further we go down here, so let's say we keep trading and we keep moving along and we find another bottom way out in here. this is going to start being extremely unusual. So far, we're actually fairly decently on pace. And we'll see how the market reacts. But oftentimes, a move in, especially a stock market move, something other than Bitcoin. Bitcoin likes to have these really dramatic bottoms, bounces, and then consolidations. So this formation may be a sign of maturity in the market. A big move down followed by a quick consolidation and another move. I expect this move to be weaker. There probably won't be a perfect bear pennant formation where we go down a full another 25% from here. I just don't think that's in the cards. I think this will be a weaker move. It's one of those designed to play on the fear that already exists in the market and flush out any other weak hands there are. That's from my point of view. This is the way I'm reading this. But from a bottoming standpoint, like we could literally be, we could be very, very close. If this isn't the bottom, we could be, just from our past data points, December 6th is as far away as we get from, that's as close to the halving event that we've ever seen in the past. So this can be worse. There's a lot of other factors at play here. But, we could be either there or within 2 weeks of the actual true bottom for this cycle. And we'll just be patient to wait through this. The one thing that we have that gives us more power than anything as a trader is patience. And waiting through this, even though there's a lot of pessimism and there's a lot of red in the markets, it's just not time to go short. Time to go short was back in the green zone, back way when we were way up in a different place. That was time to go short. When we've bled off and bled off and bled off, it can be really tempting to go, oh, it just goes down no matter what. So it's time to go short. I'm just going to go short. It's literally the final stages of this. I think the risk reward is just not there to go short. But that's just my opinion. This is, we're all living through this one candle at a time, and we'll just take it one day at a time and see what comes next. But yeah, I think there's nothing dramatically unique about what's happening as far as a timing standpoint. So we hang on and we wait for support. And once the market and the averages come down to where the price action is, we look for setups and we look for long opportunities as they come. So it'll take a little bit of time. I kind of mentioned that at the bottom of this, it'll probably take about 4 to 8 weeks. So that puts us somewhere in beginning of December to beginning of the new year to kind of flush through this move. And once we have a bottom established and we finally get our swing high, so we know where the boundaries are of our trading range, now we've got information to work with. And so we'll just kind of wait until we have those pieces in place, and then we'll go from there. All right, everybody, I hope you have a good week. Hopefully we can, bounce back here and, I figure let's get that bottom in and then we can move on. So, all right, everyone have a good one. We'll catch you tomorrow. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.